Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now in today's video, we are going to be talking about swing trading stocks. Guys, today, Royal Caribbean is squeezing up 7-8%, and we took a trade on this thing. So we're going to be talking about why we took it and how we're already up about $450 off this. So I hope you guys all enjoy it. If you guys are new to the channel, my name is Carter. I'm a full-time swing trader in the stock market. And with that being said, we do have an amazing school called the Swing Trading Masterclass. It's absolutely fantastic. We have private live streams, we got a group chat, we got quizzes, lectures. If you want to take swing trading serious like a job, I highly recommend the school. It's awesome, and you guys can use code YouTube for 20% off. So check it out down below, and I'll see you guys in there. It's literally worth the money. Check it out. And guys, I know when people think of YouTubers selling a course, they think it's a scam, but I'm telling you, it's different. It's awesome. So let's dive into this here. So when it comes to swing trading and trading in the markets here, at least for me, what I always do is I have a checklist. I have a checklist to make sure, one, I'm buying a stock because it follows my strategy, not because I'm emotionally tied to it. So for me, the first thing I always have is a notebook. Now, you guys can use a 99-cent notebook from the dollar store, or if you want to be a little fancy and get a little more organized, check out my journal that I made especially for trading. So what I do here is I have my checklist for entry. So the first thing that I have is a stock on an upward trend. Looking at Royal Caribbean or RCL, you guys will see it has this really nice upward trend. You guys can see here that the stock's gone from about $31 on the lows all the way up to highs at about $173, establishing a really nice upward trend. The next thing here that it has is really nice support lines as well. So support could be a variety of things. It could be a certain price, it could be an indicator. Now, one of the things and one of the reasons I love RCL here is it loves moving average lines. So looking at this stock here, you guys can see in the past it's hit these moving average lines, so the red and blue lines, and gotten good buying pressure at the line. So you guys can see it hits it here several times. As we continue to go, hits it here, hits it here, hits it here. So recently, I think we all remember, over the past couple of days, we've seen just a bunch of volatility in the market. So Royal Caribbean actually released an earnings report, and it caused the stock to sell off a little bit. We did get a little buying pressure actually on the 90-day moving average line, and it rallied up a little. And then on Friday, on yesterday, and all the other days, we just got crushed, selling off a whole bunch, right? All the way down to the 200-day moving average line. So the 200-day moving average line is this red line here. It acts as support, resistance, all that stuff. If you could buy a stock on this every single time, you're going to be in a great situation. So now the next thing that I have here is what's the RSI at? So the RSI stands for the Relative Strength Index. So for me, this stock was trading for a 28 on the RSI, which for those of you that follow the channel, you guys know historically anything under a 30 is a really good opportunity to buy a position. Looking back at the last time I was trading for an under 30 was back in here where we had this great move. So now we understand, okay, the stock's on an upward trend. There's buying pressure involved. Number two, it's on a support line because of the 200-day moving average line. The RSI is very undervalued. And the next thing here is when's the earnings report. So the earnings report here is going to be coming out in a couple of months just because they already released earnings. You never want to hold during an earnings. It's a 50-50 chance of making money, and it's just too risky for me. Some traders will, some won't. For me, I don't hold during earnings. It's way too risky. The next thing is risk and reward. So for me, anytime I place a trade, you have to understand your risk tolerance involved. So what I actually want to do here is go to the hourly chart and kind of show you my approach here with this trade. So historically, anytime the stock breaks above, these moving average lines, we get good buying pressure. So you guys can see in the past where it actually breaks above these moving average lines. You guys can see it breaks above it, and then we get good buying pressure. In the past, right, breaks above it. Where are we at? Right here, breaks above it, followed by good buying pressure. Historically, anytime a stock breaks up through these moving average lines, as you look at it, it's followed by good buying pressure, and then when it breaks down through it, it's followed by good selling pressure. So one of the reasons I took a trade here is, one, it was forming this really nice trend line here, like such. Another thing here is it actually broke out of the 90-day moving average line. It broke out on the 90-day moving average line at about $146, or yeah, 146 was pretty much our entry point. So getting back to risk and reward, let's go to it here. So when we hopped in here, my approach was very, very simple. I wanted to set my stop loss kind of down below, near and around this old support here, and I wanted to set my target price all the way up here at about 173. The risk and reward was decent. It's about a 2-to-1 when you break it all down, but more importantly, what I really liked was the consistency of getting buying pressure above these moving average lines. The next resistance is going to be the 200-day. If we can break above that, I think we're in a really, really good situation here. And the thing is I can easily set my stop loss right now near around 148 and still make a couple $100 off this trade. And the reason why, if we go and we look at, let's just say, the 5-minute chart, you can kind of see it a little better, where it actually starts breaking out of the, you know, of these lines here, and it's just followed by good buying pressure. So now our stop loss is going to be near and around, you know, the 148 or even the 150 range. If we can just get some sell off down below it, I think we'll be in a great spot to make a couple $100 off a very, very simple trade on the moving average lines. So guys, this is a very easy strategy you guys can do to start making money. And everybody says, oh, how often does this happen? You know, it must never happen. It happens quite often if you really look at it. Like BGC here was a stock really on a good trend line, getting good buying pressure. On the hourly, it's finally starting to break up through this. It did find, it looks like, some support here near and around this, you know, 830 range. So now, you know, there's two approaches. You can hop in on the breakout of the 90 or the 200, or you can hop in on the support and carry a little more risk down there. So, you know, this is a simple strategy you guys can do. If you want to learn how to find these stocks and opportunity, I highly recommend checking out the Swing Trading Masterclass. And don't forget, code YouTube, 20% off, and we'll see you guys in there. Hope you guys have an amazing rest of your day, and take care.